Alrighty, everybody, what is going on? Welcome back to another quick CYPRX video breakdown. We're going to be reading thoroughly through our private community fundamental report, giving you guys some insights into what to be mindful of and paying attention to in the coming days ahead. We're going to take a quick look at some updated levels to be paying attention to on XRP. And then I just want to briefly go over this Bitcoin Suisse March 2026 fundamental report that they put out that says some substantially bullish things about the current environment in the crypto ecosystem. Before we dive into today's reports, I just want to read a real quick motivational post that I put out to you guys earlier on today, where I said here, every day gives you a chance to move a little closer to the person that you are meant to become. It doesn't require perfection, just effort, consistency, and the willingness to keep improving even in small ways. Read something that sharpens your mind, practice something that builds your skill, make choices today that your future self will thank you for. Growth happens quietly, one disciplined decision at a time. Now, I don't know who might need to hear that, but keep pushing, never give up, keep striving for a better version of yourself each and every single day. With that being said, coming over here to our March 8th reports. Heading into the second week of March, the total cryptocurrency market cap continues to trade under pressure. At time of writing, the total market capitalization sits around 2.27 trillion, remaining below the key $2.3 trillion threshold that has acted as an important sentiment pivot for the market. While crypto has attempted several relief rallies in recent weeks, broader macro uncertainty and geopolitical risks continue to weigh on investor confidence. Until markets see either a shift in macro data or a meaningful improvement in global stability, we are likely to continue seeing sell pressure in riskier assets like crypto. Remember that one bullish catalyst could be enough to start a shift in the market sentiment. One of the primary drivers of sentiment this week will be the geopolitical developments, particularly the ongoing tensions between the United States and Iran. Over the weekend, there were no clear signs of de escalation in the Middle East, and markets remain sensitive to any headlines surrounding potential military developments, diplomatic negotiations, or disruptions to global trade routes. Investors will be closely watching whether tensions continue to escalate or if diplomatic channels begin to open toward a possible off ramp. A key issue markets are monitoring is the security of shipping routes in the Strait of Hormuz, one of the most strategically important energy corridors in the world. Any confirmed disruption to shipping through this passage could create a ripple effect across global energy markets, potentially driving oil prices even higher and adding inflationary pressure to the global economy. Higher energy prices historically create a more risk-off environment, which can weigh heavily on risk assets such as equities and cryptocurrencies. At the same time, Russia-Ukraine tensions remain unresolved, with continued reports of military strikes over the weekend and escalations. As long as both of these geopolitical hotspots remain active, markets will continue to price in geopolitical risk premiums. For crypto markets in particular, this environment tends to create uncertainty as investors shift capital towards safer assets while waiting for clarity. Beyond geopolitics, the second major focus for the markets this week will be the US economic data, particularly inflation and labor market indicators. These releases are crucial because they will shape expectations around the Federal Reserve's interest rate path, which remains one of the largest drivers of global liquidity and risk sentiment. The most important release this week will be the US Consumer Price Index, or CPI data. Current expectations suggest the annual inflation rate could edge slightly higher to around 2.5% from 2.4%, while the monthly increase is projected to remain steady at 0.2%. Core PCE inflation is also expected to remain around 2.5%. Markets are extremely sensitive to these figures because recent Federal Reserve commentary has emphasized that inflation risks still remain persistent, which has pushed back expectations for rate cuts. For risk assets like crypto to regain stronger momentum, the market would ideally need to see inflation come in below expectations or below previous readings. A softer inflation print would ease concerns that price pressures are reaccelerating and could support the narrative that the Federal Reserve may still begin cutting rates later on this year. That shift in expectations would likely improve liquidity conditions and support risk appetite across global markets. On the other hand, if inflation comes in above forecast or above previous readings, it would reinforce the Federal Reserve's more cautious stance. This outcome could further delay rate cut expectations and strengthen the US dollar, which historically places downward pressure on cryptocurrencies and other risk assets. Alongside inflation data, investors will also be watching a range of secondary economic indicators throughout the week. Durable goods orders are expected to rebound around 1.2%, while housing market data continues to reflect the pressure of higher interest rates. Existing home sales are projected to fall towards 3.90 million units on the annualized basis, following a sharp decline earlier in the year as elevated borrowing costs continue to weigh on demand. Consumer sentiment data will also be closely monitored. The University of Michigan Consumer Sentiment Index is expected to ease slightly from 56.3, reflecting continued caution among consumers as inflation pressures and borrowing costs remain elevated. Other important releases this week include unemployment claims, JOLTS job openings, building permits, and housing starts, along with consumer inflation expectations, and the NFIB Small Business Optimism Index, along with the monthly U.S. budget statement. Each of these indicators contributes to the broader picture of economic health and liquidity conditions. One particularly important area to watch will be the labor market data. Last week's non-farm payrolls report showed notable weakness compared to previous readings, which briefly revived market expectations that the Federal Reserve could begin easing monetary policy sooner previously than expected. As a result, markets are now placing roughly around a 50% probability on the potential rate cuts around June or July. However, markets failed to rally last week after key Federal Reserve officials said one labor report won't change the rate cut outlook. This week's labor data will therefore be critical in determining whether that weakness continues. If additional labor indicators begin to show signs of cooling employment conditions, while inflation remains stable or declines, this combination could strengthen the case for rate cuts later this year. Such an outcome could support risk assets, including cryptocurrencies. Conversely, stronger labor data combined with higher inflation would reinforce the Federal Reserve's cautious stance and potentially push rate cut expectations even further into the future. That scenario would likely create additional headwinds for the crypto markets. Beyond the United States, markets are also keeping a close eye on developments in Japan's currency markets. The Japanese yen has experienced significant weakness in recent months, and any further deterioration could raise the probability of a currency intervention by the Bank of Japan. Such an intervention could trigger volatility across global currency markets and potentially unwind portions of the yen carry trade, which historically has implications for global liquidity and risk assets. In addition, trade policy headlines remain underappreciated risk factors. Markets continue to monitor developments surrounding potential tariff discussions linked to Donald Trump's economic agenda, particularly regarding trade relationships with the European Union and other major economies. Any escalation in tariff tensions could add further pressure to global risk sentiment. From a structural perspective, the $2.3 trillion level remains a critical threshold for the total crypto market cap. This level has acted as an important sentiment pivot in recent weeks. If the market continues to trade below this threshold and sentiment deteriorates further, investors should be prepared for the possibility of a deeper correction across digital assets. In that scenario, the next major downside targets could emerge around 2.05 trillion, with a more extreme bearish scenario potentially extending towards 1.71 trillion. However, if sentiment begins to stabilize and buyers are able to reclaim and hold above $2.3 trillion, this could open the door for a more meaningful recovery phase. In a bullish scenario where macro conditions improve and risk appetite returns, the next major resistance zone for the broader crypto market sits around 2.6, followed by 2.89 trillion. For now, the week ahead will largely be defined by the intersection of geopolitical developments, inflation data, labor market signals, and central bank expectations. Until markets receive greater clarity in these areas, crypto traders should remain prepared for continued volatility and rapidly shifting sentiment. The coming days ahead will likely determine whether crypto markets begin building a base for a recovery or whether the broader macro pressure pushes the market towards another leg lower. With that being said, let's head over to our last XRP analysis update. I gave you guys an update over on X just a couple of days ago. Nothing has substantially changed outside of this update, but I did want to show you guys some institutional buy and sell walls that have popped up utilizing our institutional order flow tools. However, definitely go back and check out this last video breakdown from just a day ago because we also cover and do an update on Canton Coin's price action as well. Heading over here to my X profile, you guys can see I just recently gave you all an update on XRP. So reading thoroughly through this. XRP institutional order flow breakdown provided by our in-house institutional scalper. Remember that at any point in time, you guys want access to these institutional insights. These insights are available inside our private CYPRX Discord utilizing our order flow tools. You guys can always tap in with us. We'd love to have you on the team. On the 4-hour time frame, we are currently seeing sellers absorb buyers, with institutions putting up a passive defense around $1.37. This tells us that every attempt buyers make to push price higher is currently being met with strong sell liquidity. Below current price, we have a key buy wall sitting at around $1.34 to $1.31. This zone represents the last major area where buyers could attempt to defend price in the short term. A bullish scenario for bulls to regain control, the $1.31 to $1.34 support zone must hold. If buyers successfully defend this region and trap sellers, the next step would be for buyers to overpower the passive sellers sitting at about $1.37. A break in acceptance above $1.37 would signal that buyers are regaining momentum. If that happens, it opens the door for price to move into the next major sell wall, sitting between $1.39 and $1.49. If at any point in time $1.49 is surpassed, this could open the door for a fuller recovery to $1.62 to $1.98. To the downside, the bearish scenario. If buyers fail to defend the $1.31 support level and sellers successfully break through that buy wall, it would indicate that sellers' pressure is overwhelming demand. In that case, we would likely see much lower levels begin to materialize as liquidity below gets targeted. Looking at the daily time frame, here you guys can see this over here to the left-hand side. The next major structural support sits much lower around $1.11, where we have a large buy wall that exists. You guys can see that here. If the $1.31 to $1.34 zone fails, the $1.11 area would likely be the next major level where buyers would attempt to step in and defend price. However, if $1.11 breaks, this would open the door for a deeper retracement down into the institutional dark pools that we covered in the last video breakdown, around 91 cents. I do have one more thing to share with you guys today that I just recently posted over on X. If we come down here to a recent Bitcoin Swiss industry rollup from March 2026, they said some very interesting things that, in my personal opinion, are extremely bullish coming from an institutional investor. Now, right here, it says crypto enters 2026 as the only major asset class still trading at a meaningful discount. Price pain is largely behind us. What remains is time pain. Meanwhile, fundamentals continue to strengthen. The setup is rare and the spring is coiling. I find that very interesting. Then here it also says crypto remains schizophrenic in this phase. It participates in the hard asset narrative over full cycles, but still trades like a risk on barometer and stress driven windows. Current drawdowns are cyclical, not existential. Should geopolitical tensions stabilize, ETF flows normalize, or the Clarity Act accelerate, the setup favors reallocation. So I said here in this post, they're basically telling us to buy the dip. Obviously, of course, not financial advice, but I thought that you guys would enjoy those two little tiny statements coming from an institutional investor in this space. Those are two pretty bullish statements coming from a document that they just recently released in March 2026 that literally says the spring is coiling up, right? So with that being said, many blessings to you guys. Hopefully you all enjoyed today's video breakdown. If you did, do us that favor, smash that thumbs up button and subscribe to the platform. No hopium, no hype here, just real institutional insights when they matter most. Again, if you guys want access to our institutional order flows, our dark pools, our deltas, you guys can head over to CYPRXtrading.com. You guys can tap into our private CYPRX Discord. You guys can get direct access to these institutional insights that are updated via our institutional scalper on a daily basis. We'd love to have you on the inside. With that being said, be cognizant, be aware out there, and I'll see you guys in the next video breakdown.